Okay.
Yeah. So this is a daily time frame. Basically, what we can see here is we are now in a bullish market condition. Price took out this high pullback. So basically, we are expecting to see for the bullish movement of price to the upside, because what you can see now is this is the newly created low points and this is the high points. We don't really have that high yet until we see first, but let's just take this range. So we have price broke structure here. We have this internal liquidities. We can see how price return took out those internal liquidities. So price just seek those liquidity because this is within like a choppy market condition. So you're going to have a manipulation.
Mm.
So this is the manipulation and price has given us the distribution to the upside. So if this is going to continue bullish, then we should see a pullback that will not take out this low. Are we getting it, sir?
Yes, yes,
The
yes, yes.
pullback should not take out these low points. So we should see price will pull back to the downside to mitigate any sponsorship zone within it. We'll get to POI, but now let's just pay attention to just structure. So we can see how price would return, find any sponsorship zone, and we have the continuation. Since we can see, we've identified that we have a break of structure here. So we have a BOS there.
Yes.
So we have a break of structure there. So we want to identify for the bullish movement, since that is what we've seen. Price returns, seek the liquidity, and that. So let's play price to see what happens. Okay. Price is further going to the upside. So basically, we can see that price is still trending to the upside. We want to see price seek the internal liquidity. So we have
Okay.
pullback. So you can see here we have this inducement here. And in picture we have
Yes.
this other one here.
That one,
What we
yes,
can see here
yes.
is all these price movements have been mitigated. So there's a possibility of price not just sweeping this one alone, but even dipping more lower and take this one away. You get it?
Okay.
You get, because what
Okay.
you can see is, let me broaden it. You can see that we don't really have fair value gaps here. All the fair value gaps have been filled up. You see,
Sure, sure. That's good. That's
so you
good.
can
That's
have
good. Yeah.
other blocks, but you don't have, so it could violate this other one too. Since we can see we also have fair value gap here, left here. So we could
Yeah.
see price dip more lower before we have the continuation to the upside. So these are our inducements. So let's play price to see what happens. Now you can see how price took out this inducement, took out this inducement. Now you can see how price. Now for the concept of order blocks. Now, you know what most SMC traders would make you understand is that it must be that candle that sweeps liquidity, right? And then leaves fair value gap and other things. Yes, that is correct.
Yes.
That is very correct. That is very correct. It's a streamlined order block that help you to just identify the ones that are somehow more suitable. Now,
Wow.
order block basically, for example, the bullish order block is the last sell candle before the bullish movement. You know, you for the way we've been taught to identify order block, we know definitely we can't consider this as an order block, right?
Yeah, sure,
Because
sure.
this
Yeah.
did not sweep this order low points, right?
Yes.
Are we together,
Yes.
Mr. John?
Yes, yeah, yeah, yeah.
Because this did not sweep this low point. The last down close candle before a movement, before an impulsive movement that breaks structure, that leads to a market structure shift or break of structure, that is where you have an order block. That is for a bullish market
Mm.
condition. What you're going to see is here you have a bullish movement. This is where the institutions sold from. The institutions gave us a down close candle. You are in a bullish market condition. So, you know, your expectation is you want to keep seeing up close candles. You know, a bearish candle opens at the high and close at the low. A bullish candle opens at the low and close at the high. So
Yeah, I'm with you.
this candle, we are in a bullish movement. This candle is the candle that closed to the downside. Give us, this is the open of this bullish candle, of this bearish candle. This is the close. So meaning this candle went against the movement we are seeing here. And now we had a down close price, but then this down close price sponsored an impulsive movement that broke structure.
Mm.
That is This is an order block based on the Michael Anderson concept. That is why
Hmm.
you would see that you find out that order you can see price respecting some order blocks in your chart when you're analyzing.
Sure.
But because you have that
That's true. Yeah.
knowledge that it must sweep liquidity, you get it. So you see like
Hmm.
price just reacted at it. No, you get.
Hmm.
So the thing is you have to understand how does the price move. This is the secret. I don't know if you can just get the psychology, I understand. But I'll stress it so that I don't know. I want to give you the picture. This is it. Now, basically it's just like let's say you are in it's just like the pullback I explained. Market is in
Yes.
pause, then you have corrective. You know that corrective went against the movement. You get.
Sure. Sure. Sure.
You know, you
Yeah.
want to take your entry at the pullback.
Hmm.
Because pullback, let's say for example, you are in a bullish market condition, the pullback, the retracement is what will give you the discount price. So meaning you want to take your trade at the discount price because that is where the institutions also will be taking their trade at the discount price. So that is the concept with order block. This is it. Price is moving to the upside, but then institutions now made movement to the downside. They gave us a down close price instead of an up close price. They gave us a down close price, meaning they manipulated the market within this candle. You get it? Basically,
Hmm.
order blocks are candles where institutions manipulate the price. You get it? So there are zones where
Yeah, I get it.
institutions manipulate the price. So now what they did here is before taking out the external liquidity, they manipulated
That mean-
price here.
that means if you go to lower time frame,
Yeah.
this place that you are pointing out is going to be a rally on. It's going to be a base.
Yeah, God bless you, sir. This is a rally base rally. So that is why when you are backtesting, some of these things they come as a result of you backtest the chart. You get to understand some of these things. You get it, sir. So now
I
that
get
is
it.
why
I
we
get it.
can still see that price faced a reaction here. We could still see this reaction.
Oh, yeah.
Also, you can see there is a fair value gap there.
Yes,
So
above.
that is how we can still see that price faced a reaction here. So let's further play price to see if price is still going to dip lower before we have the bullish continuation. So let's play price to see. Okay, price is still falling to the downside. Now, you know now what we are seeing here is not that we have a change in market character
Of character.
until
Yeah,
price
sure.
breaks these low points. Meaning all these ones are
Yes,
just the pullback happening. You get.
yes.
So that is why when you now drop to a lower time frame, you're going to find that inside this leg is a structure. You'll be seeing structures being formed.
Sure, sure.
You get. But in the higher time frame, what you're seeing here is uh a pullback. Let's look at for example,
Yeah.
let's just go to the weekly that you see that that is just a movement that you see it's just a movement that is falling downward. You can see
Yes, yes, yes,
it's just a
yes, yes, yes.
movement that is falling downward. That doesn't mean that the market have changed its condition until it takes out this low point. Now let's still play price to see what happens. So we can see price still trending to the downside. So we can see how price here return. There is, I would also teach this. You must also understand that weeks are also sponsorship zones. You get. The truth is, there are a lot of informations about the market. But the thing is, you have to just choose what you want to stick with. But then, if you know, as a result of studying the chart always, you get to understand these things. That okay, even weeks are sponsorship zones. Because once you find a week, for example, like this week now, you drop to a lower time frame, there's a possibility of finding an order block inside it. Because this is now what is called a rejection block. You get.
Okay.
So the thing is,
Yeah.
Mr. John, there are a lot of informations. The thing is gradual. You get it's all about it's gradual.
Yeah.
You start seeing these things based on how you backtest also. You get it.
Yes.
People mentorship will give you the knowledge, but the truth is, when you sit with the charts, applying those knowledge, seeing them, implementing them to the chart, it helps. It sticks more. You get than just
Sure,
speaking, than
sure.
just
Yeah.
working with just the knowledge. You must implement, apply the knowledge to the chart by back testing. So now we can see now price return. So we since now we've seen a pullback. So price have created the high, meaning it has already created the high, and this is the high, right?
Yes.
And this is the high. So meaning since we have We are expecting now to see return because price have already seeked all the internal liquidities. We can see them all here.
mm,
We can see them. You can see them all here.
yes,
Price have already took
yes,
all internal liquidities, all of them. So what we are expecting now is further bullish to now take out the external liquidity. Right, Mr. John?
mm,
All right. So let's play price to see how far it will go. Now we are seeing that price is pushing to the upside. Want to see price takes out our high points. Okay, price is failing to do that. Whoa. Okay, wait. Wow. So now what we can see is price created this low, right?
mm,
Now we see price created this low. This low failed to give us for the bullish move to take out this high. What we can see is that price took out this newly created low. Let's look at that. Yes. All right. Let me put it very well. So we can see that it failed to take out this high point. Price took out the low point. And we can see this candle body closed below. So now, if you want to expect to see a market structure shift, you want to hold the possibility of price have to break this other swing low, right?
mm,
But now what you must see is that price created a new swing low point. It is this swing low point that failed to take out this high.
yes,
This swing low failed to take out this high. This is the most recent created swing low point. And then this swing low point failed to take out this high point. Now here also we have a market structure shift because now this failed to create further bullish move to take out this high point. Except you just want to be a conservatory trader and then you want to wait for price to sweep this one, since this is a strong low point that took out this high point. But in conditions where
mm,
you see price created a new low and that low failed to take out the external, it means that is a weak low point. You get it?
yes,
And then price breaks it and closed below it, then we should expect the possibility that this will go bearish, because now what we have is shift in the market structure based on the swing
yeah,
points.
market shift, yeah, market shift, yeah,
So it has shifted. That is why there's what they call SMT divergence. Basically, let me use for it, let me just use the Nasdaq and yes, S&P 500 E-minis. There are moments when you see, because those guys, those commodities or stocks are positively correlated. Let's say we have this price movement, we have this, and then we have this. Then now in the other one we have this, we have this, we have this, we have this. So what you can see here is swing low, give you another low, and then this one you
yes,
will see low fail to give another low, give a high. Now this is what we call
yes,
SMT divergence, and it is basically a comparison between positively correlated asset classes. So now Nasdaq and the E-mini futures are positively correlated. So in a case where you see these guys, their trends are the same, are similar. In a case you see this movement in Nasdaq creating a new low, and then S&P, that's ES, failed to create a new low, and then you're seeing this movement to the upside. Now, what it's just trying to tell you is, in this case, S&P 500 has more stronger bullish momentum than Nasdaq, but all of them are going to be bullish. You get?
wow,
So when you see
yeah,
this, let's say you find this in Nasdaq and you find this in S&P 500, then this is not trying to say that you should expect more bearish, since S&P is failing to
mm,
break its own, especially if it's mitigating a higher time frame zone. So you should know that if you're buying S&P, then you should wait for an opportunity to also buy Nasdaq. You get it?
mm, yes,
So this is breaking structure, but then this failed to break this swing low and then gave you this. You have a shift in market structure according to the swing points. You get it?
Yes.
All right, so that is what we can see happen here. Though this one we are not correlating it to GU or any other asset class. So we can see
And
that this is the created low and it failed to take out the external we're expecting. Price dumped to the downside and broke the low. So we also have a market structure shift here.
yeah, I get
All
it.
right. So we now have a market structure shift here. Except I just the way I've said, you just want to be conservative. You want to establish your conviction very well. Then you want it to take this strong low point. But it will take time, you get. So and this is daily time frame we're
Yeah.
trying to use to establish this. Now we can now see that where's the pullback after the break of this structure. Now, when we are
Yes.
identifying now, let me just consider all this movement as one even though we can take it because this okay, let's just do it. This swept this, we have this return. So this candle did not move further. This is the lowest candle, so we don't have the sweep. And this other one, are they equal? Or the bearish is the lowest, so we have this and then we have a pullback here. We are together, Mr. John.
Yeah, 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 yeah.
So we have this fall and we have this pullback. It swept the high. We have this fall, we have this pullback. Now further we went to the downside. We have this pullback. We have this pullback. Now we have this. But I believe you are seeing it, right?
Yeah, I'm saying it.
All
Yeah.
right. So let's see. So since price took out this liquidity, external liquidity, so we want to see price return to seek internal liquidity. And now since we have
Okay.
this the internal and this fair value gaps. So what you can clearly also see here is that price swept this low point, this return again swept this high because you have a valid pullback here. And now price swept this high points here. Price swept this high. I think we can also see that price swept the other high. Let's see. Price swept this other high. Yeah, price swept that other high. So now what we can see is all these other pullbacks, this internal, were swept by this pullback to the upside, swept this high, swept this high. Now we have, this is where we have the most recent inducements.
In this one, yeah.
Yeah. So now we can see that price took out that inducement. So we could see the possibility this price could just react here, respect this zone and fall because this zone took out these other liquidities. Are you getting it, sir?
Yes.
Let me enlarge it. Let me enlarge it. Because these candles took out all these liquidities here. So we could see a
Yes.
possibility of it falling from this zone. So that is why I said we could see the possibility that price may reject at this zone here and then falls to the downside. So this is the last up close candle that started sponsoring this bearish movement to the downside. By refinement, considering the one that sweeps liquidity, you will want to now refine it to this other one here, the bearish colored one, right?
Hmm.
Yes, you get it. So now that is why I said we could see a reaction here, or price may still seek these other liquidities, and since we have this fair value gap and falls. So indirectly, we're just trying to say we have a decisional point of interest, and here we can consider this other flow and say this is our extreme point of interest, since we have these fair value gaps. We get it? All
Yes.
right. So price can respect the decisional point of interest. I don't know if you've watched the video on the point of interest identification.
No, I've not finished watching it, but I've started sharp.
Okay. All right. No problem. So here we have those fair value gaps. So let's play price to see if price is respecting the zone and then giving us the further downward movement. Since we can see it has already seeked the internal liquidity, took out the inducements. So let's play price to see what happens next. Okay. Well, so now basically now we can see that price further went to the downside, broke this structure. In extension, we can see it took out this strong low points. Are we together, Mr.
Yes.
John?
Yes. 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 Yes.
So meaning we have a break of structure. Since this is our market structure shift, we have our break of structure here. So we have our break of structure, this seek liquidity. So this is the new low point that was created. This is our high. So now what we can see is, let's see, we have this fall to the downside. Let's look at this clearly, please. Sorry. All right. So this is the lowest candle. We have a pullback that swept it, right?
Yes.
So we want to see if price will
Yes.
seek this, and then we have a fall. And there is one thing we must also understand. When you see price breaks a zone and then create a sponsorship zone around that zone, then you can consider the sponsorship candle that was created around that zone. Because basically, just like saying this is a demand zone, you have a bullish order block here, and now price created a bearish order block there. You get that is a flip zone. Are we together? Where is the up close candle that further sponsored this bearish movement that broke this structure? It is this bullish candle. This is the up. We are in a downtrend. Institutions reached here and then they
Mm,
bought and then they dumped price. This is a manipulation. They bought, gave us a higher price,
mm,
and then they took
mm,
price higher and then they dropped it. This is the open of
yeah.
this candle. Price closed here. So price closed here. For the bullish, it opened here and then they took it high, premium, and then they dump it.
Wow.
You get it?
I've been seeing this thing on chat, but I don't understand it
uh
because I'll be looking at it. Will be saying that decisional POI, extreme POI. I'll be what's this? What's the meaning of this? You get?
Yeah,
And market usually react then.
yeah. So there we have that, and we can now see that you can clearly see we also have fair value gap.
Yeah.
All right. So we could see the possibility of basically now we are looking at price seeking the internal liquidity. This we can see price mitigate this, or we could see price still further push to the upside. But I just wanted to call your attention to this. So let's play price to
Okay.
see. Okay, okay. Now we can see a sweep. Okay, we can see price swept the inducement. Price mitigated the fair value gap, filled up the fair value gap. So I said fair value gaps are also point of interest to consider, right?
Yeah, yeah, yeah.
So you can see now price filled up the fair value gap. Even though we can see that this movement did not push to tap this bullish candle, but we can see that it filled up this fair value gap. Anyway, we could still see a return to the upside, but let's play price to see. Okay, okay, all right. So now we can see price for the return to the upside tapped into it. Let's see if it tapped it. Let's see.
Market. Let's know.
Uh,
Market.
So we can see it tapped it and then price fell. We're together,
Okay.
Mr. John.
Yeah, 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 yeah.
So now we can see here that price here took out this internal liquidity. Now we have this candle to the downside. Let's make sure that candle closed so that we can identify the breakout structure. All right. So the candle closed. So meaning we have a breakout structure here.
Break of structure.
Yeah.
Valid.
So we have a breakout structure here. So meaning this is our newly created high point, right?
Yes.
Here is our newly created high point. Let's do it this way. Price created the low, gave us the high. Price now have printed this low. Price have printed this high point. So now we'll be expecting to see, we have to identify where is the next draw on liquidity if price is pushing to the upside. So let's see what happens. What we can see here is we do not really have a pullback here to consider as the next draw on liquidity, right?
Yes. Yes.
Aside from where we have this candle that swept this low. This is the lowest candle that
Yes.
swept this low, and then we had this pullback. So if we
Yes.
are to look forward to a draw on liquidity, it should be this zone. You get it?
Yeah. That's right. Yes. I get
We
it.
are to look for a draw on liquidity, there should be that zone
Yes.
after this fair value
Yes.
gaps. But just the
Yes.
way I've
Yes.
told you, we can see scenarios where price may not create a swing point within
Mm.
an impulsive movement. You get it? In a higher time
Mm.
frame. But when you drop to a lower time frame, you can find that. You get it?
I know. Yes.
Yeah. So
Yes.
now we could see now price just fill up this fair value gaps and then it will drop. But then when we go to like 4 hour time frame, we can find swing points there. You get
Yes.
because let's look at
Yes.
something. I'm coming. I think I just saw something. Sorry. I think I just saw something. Let me see. Okay. We can see that this candle went against this bearish, right?
Yeah, that's a valid pullback.
So in a lower time frame now, you're going to see it as a valid pullback. In a lower time frame, what we are going to see is the possibility that this is what we'll find, and then we'll find this, and then this. That's if this is going
So
further
this
to
is
the
our
upside,
inducement.
then this can be the sweep. You get it, sir?
Yes,
All right.
yes.
So now let's play price to see anyway. Let's see if that will really respect what we are thinking. Okay. Well, okay. Okay. So what we can see is price here is just
It's
consolidating.
ranging.
So we can see
Yes,
a price fell to the downside. Now you can see this is a lowest candle. This went against it and swept it, right?
yes.
Now, meaning basically now we will have a swing point here, which is this high here. Based on ICT, that high is an order block. The up close candle before this fall to the downside. You get it? But then this did
Mm,
not really sponsor a break of structure. This one, you get. Are we together, Mr. John?
mm.
So we could see price may
Yeah.
violate this order block. That's just the truth. We could see price may push ahead and violate it because this did not really
Okay.
lead to a break of structure. Are you getting it?
Yeah.
This is your inducement. Price have swept it, yes, but we could see a candle may come and sweep it with with body closing above. What I'm saying is now let's look at it. You know, we said we have, let's say this is the fall. In the lower time frame, we could see a pullback here, and then now from the daily, this is the ideal pullback, and then price fell.
Yes. Yes.
So meaning you want to see price will seek the liquidity here. That is why you can see even though this is an up close candle that further sponsored the bearish move. Now you can see how price respected it. But even as price reacted at it, it swept the high because it knows that people will consider this as an order block. So it will sweep the stop losses. You can see how this candle will sweep the stop loss.
Yes.
And even above it, we have this fair value gap. Now you can see how price is just consolidating, trying to make decision either to go up or go down. Now you can see this is forming accumulation. Are we together, Mr. John?
Yes.
So it is forming accumulation, this movement. So if we are going to continue bearish, then there's the possibility what we are going to see is price will sweep the accumulation and continue downwards. You get it? This is
Mm.
accumulation.
Yes.
So we want to see the manipulation and then we see the distribution. That is what we call the power of three.
Yes.
You get it?
Yeah. Yeah. AMD.
Yeah, because we have fair value gap unmitigated. We also have this extreme here. So there's a possibility that this
Mm.
could return, mitigate, fill up this fair value gap. That will give us the manipulation, and then we have the distribution. So let's just play
Mm.
price to see. Okay, still ranging. All right, awesome. So now we can see how price. You see, this is just the accumulation phase in the daily time frame. You can see it. Let
Yes.
me just put it. So this is it. This is the accumulation. So you can see we have that manipulation. It went
Yes.
against it. So we could now see since price have given us this manipulation to the upside, we can see price mitigated this fair value gap, and then we
Value
have
gap.
price falling to the downside. So we could have further bearish continuation to the downside. Basically, price have
Yes.
taken now the inducement. Are we together? The internal liquidity. And now we can see how price here formed another liquidity because you know we have lows, highs. Price now have raided the
Yes.
high. Where is the next liquidity you think
Yes.
price will be seeking? It is the lows.
Oh yeah.
Yeah. So let's see. Let me remove this. Let me also remove this. So let's play to see. All right. So now you can see now price went to the upside, price fell. So meaning we have a break of structure here. Now price have created a new low point and has given us this high. So let's look at something here. There's a manipulation here. So now we can see now price created this high. Now we have this impulse to the downside. Now let's identify, do we have a valid pullback here? Now price fell. This is the lowest candle. This did not return to sweep the high. Indirectly, this is just
mm,
telling us our movement is just from this high to this low, right?
yes,
So
yes,
now, in cases like this, where we have such impulse like this, and then we are seeing that price is just going with this intense impulsive move, then we could see the probability that since we can't find the uh, buy side liquidity that price took here, are we together, Mr. John?
yes,
Because we don't really have
yes,
a valid pullback,
yes,
but we know that it has filled up the fair value gaps, and then we are seeing that it gave us this momentum. So it is either price may seek to rate this high and fall. It may seek to want to just take this buy
mm,
side liquidity. Since there is no pullback within this leg, you get a valid pullback.
yes,
It's an impulse. So we could see price may seek this. We could see price would seek this and then continue to the downside because we don't have a pullback here that creates a buy side liquidity for price to seek before further continuing and then a return to seek it and fall. And now we are seeing this impulse. Anyway, let's just see. Let's play price. Okay. Okay. Did this let's I'm coming, sorry. Let's see. Okay. All right. So now we can see price swept this. In confluence, I think our identification in confluence would be that you would know that we have further fair value gap above. And I told you that when we drop to a lower time frame, there's a possibility that we could see that this is a pullback, right? And then now price fell.
yes,
So because we do not have that pullback here, this further gave us this impulse, seek this to the upside and fell. So we don't really have a market structure shift here. Are we together? Because you see, we have a
sure,
sweep.
yes,
All right. So indirectly,
yes,
this is trying to tell us that the high is no longer this high. It is this high
yes,
because this swept this other high. So it is just trying to make us
yes,
understand. It's just like this is now. Let's just play price to see again. Let's play price to understand this. Okay. Now this is it. Now we have price swept this and fell. So indirectly, if we are going to mark this structure, if we are going to mark this structure, it
mm,
means, we're following delivery gradually, gradually, and this is the last that
yes,
was made. Indirectly, what price is trying to tell us is this is the inducement, meaning this is the
mm,
leg like this. Let me show you what I'm saying. It means this is the leg entirely. Now price have seek
yes,
this, and now price are falling. So meaning here we have a break of structure. We have
structure,
a
yes,
break of
you have,
structure now here. So we have to identify where are our buy sides liquidity. What we can see is a fall here. Here's a pullback. Price fell. Let's do that. Here is a fall. Here is a pullback. Okay, this is not okay. No, then price fell to the downside. Here's a fall, a pullback. Price fell to the downside. So what we can see clearly here is this. That is why I said when you are in a higher time frame, this is daily time frame, right? Yeah.
yes,
So when we go to lower time frame, we could see within this movement structures, this impulsive movement.
sure,
This is why I said
sure,
when um a next drawn liquidity in a higher time frame is far away, you can utilize the ones in a lower time frame. You get it. So we can see here
mm,
this inducement is quite far. The next draw on buy side liquidity. Price may not necessarily sweep this one. That's the truth. You get it.
mm,
Price may not necessarily have to return to seek this one and then it will just continue falling. Now, what we can see is price gave us this movement. This is a down close candle, but here you have an up close candle, an up close candle here, meaning the institutions
mm,
gave us a higher price here and then they now sold from it, meaning there is a presence of the institutions here. If there is going to be a sell continuation, we could see the possibility that that sell continuation will continue from here. That's why I said this does not fulfill that simple criteria for other blocks that you see online. But basically understanding where did the institution manipulate price before breaking structure. It is this candle. This is where they gave us a premium price before they sold to the downside. It is within this bullish candle. You get it?